Meow everybody, meow meow meow, Cantonese cat here. I want to talk to you about Matterport, MTTR is the ticker symbol, and it had a earnings report after hours, and the result wasn't really particularly pretty. It was down about 11 to 12% a couple of hours after the earnings report have been released. So I kind of want to go a little bit through some of the slides deck here. I don't want to go through everything, including some of the numbers that, the non-GAAP loss. I'm not going to go through that because they kind of flush the number a little bit. They did have a revenue of 39.5 million, which is just a slight miss. I think the expectation is 39.9 million, and most likely the algorithm just completely tanked the stock by about 11-12% because of the miss. The key thing, though, is that the whole idea of the bearish case for Matterport is that there's no moat and that this is something that can be really easily replaceable. They are not growing and they're not getting subscriptions. There are a bunch of competitors out there that are eating their lunch. Well, in reality, it's that you actually have an increase in the number of subscribers throughout the last 3-4 years, and it's still growing. Now, granted, I would like to see a little more exponential growth if possible, but they do have a linear growth. Taking into consideration, though, 2022 is actually a pretty rough year. I mean, based on a lot of metrics, a lot of people actually think 2022 is actually a recession year, even though the unemployment didn't really spike up. But it's just a very, very terrible year for the stock market, for global liquidity, and also for real estate, which is their bread and butter. They do branch out to travel, hospitality. They do branch out to industrials and other things, but the major bread and butter is real estate. In a high rate environment, there's just not going to be a lot of inventory moving. The volume is just going to be relatively low. A lot of people that own their house, they are not willing to sell their house at a low percentage of finance rate and to get a mortgage at a higher rate. That just doesn't really make a whole lot of sense. So the inventory has actually been quite low, and it's been hitting the real estate market in a pretty big way, and I think it shows. I really think the growth would have been a lot more exponential, but considering how bad the year was, 2022, or even 2023, it's been a pretty rough year too for real estate. Considering that, I think that they're actually still growing subscribers, which is promising. And the important thing is subscription revenue actually has accelerated. You can see a nice accelerated growth right here, and that's also the major source of their revenue. Now, with that said, they did not highlight the services and product revenue, which they're trying to shy away from. They're really going to try to go for a more subscription model. But the services and product revenue actually has been a little bit shrunken, just a little bit. They didn't really show that. But I think this is what matters the most, is the subscription, how much money you're making from subscription, and it seems like it's growing. The other thing, just overall, is the revenue growth. They're saying that they're growing about 31% per year. Majority of it is probably happening over the first 2 years here in 2019, 2020. There's a pretty nice growth. The growth tend to seem to be just a little tiny bit decelerated, and it's just been kind of steady since then. And they're guiding also, basically in line of this steady linear kind of growth, which is not the most ideal for a company that is thought to be a growth company, but they'll also be potentially sent back in a little bit. And also considering if the rates end up being lowered in real estate market, if it ends up recovering, there's a huge chance that there could be a pretty nice acceleration of growth here within this company. But right now, it's just not favoring that, unfortunately, right? But 30% growth annual is nothing to sneeze at. Do want to go through another thing that I find to be very favorable, is that they basically have a cash and cash equivalent of about $423 million, which is not bad at all. The balance sheet is very nice. There's no debt. And there's barely any significant cash burn from 2022 to 2023, considering how bad the macro has been for 2022 2023 for a company like Matterport. If you think about the market cap, in terms of how much cash they have, the market cap right now is, before the market was 776 million, right? The stock just dropped like 12%. So if you take into some calculation, it's probably going to open tomorrow in market cap of 680 million, right? So that means that the majority of the money that Matterport has, including total stockholders' equity, a majority of it is actually going to be in cash or cash equivalents, which is something that you can sleep well at night because you're basically practically almost getting a business for free. The bad thing, though, about it, and everybody knows this, Wall Street knows this, and that's also a big part of the reason as to why it's holding the stock back, is this number right here, which is the stock-based compensation. It did go down from 150 million to 127 million, but it's still a lot of money that's being spent on stock-based compensation. It's diluting shareholders by a pretty significant chunk, and that's also part of the reason as to why you might end up having a loss just from something like that, which is not ideal. The trend is going down, but it's still significant. We'll see how it goes. But with that said, the cash is nice. The fact that it's still growing is nice. The number of subscription model and the subscription revenue going up potentially exponentially. That's also very nice, right? Another thing that's also very nice about this company is that the institution growth has been increasing really since it came out as a spec, right? And really, it looks like it's very, very nice exponential growth, especially over the last 6 quarters or so. There really seems to be a pretty increase in terms of number of institutional accumulation of the stock, which is always a good sign. Right now, it's only got maybe about 38% of institutional ownership, so the majority of it still tends to be retail, which is not ideal, but the trend is changing, and I do like the fact that institutions are taking notice of this stock. Now, one thing is to look more at the technicals of the company. Now, this is one of the rare cases that I'm more basing it on fundamentals rather than truly technicals. Because you look at the technical, there still hasn't really been any confirmation that is really starting to have a positive trend change or anything like that. The biggest problem is that it went from a very high price of like 35 30 it went from $38 all the way down to maybe like a little bit less than $2, right? So with this whole process, this big giant downtrend, and if over the last 20 months you're still going to see some pretty high numbers in the 4s and 3s, when the lows are, you're talking about like maybe in the 2s, you're still going to take some time for you to really start seeing a trend change. Now, it does look like, just based on eyeball, it does look like it's going through a little bit of a base right here. But if you look at the Bollinger Band, which is one way to look for a true trend change, it still hasn't really completely flattened, and it's because a lot of the moving averages is still taking into consideration a lot of these higher numbers right here. As the numbers continue to base, it will flatten, and once it flattens, and especially if the business actually continues to grow, if the numbers continue to look a little bit better, as stock-based compensation continues to look less and lesser, you could actually see a little bit of a higher number right here, and that could actually cause the trend to change into more of a bullish trend. That could take a few more months to happen. I can see that. So when that happens is when you really are starting to see a bull trend, and you're really starting to see the institutional accumulation is starting to come into effect. If you look at the volume, you can see the sell volume has drastically decreased. Really throughout 2022 to the beginning of 2023, there's not really a whole heck of a selling pressure if you look at just the volume, right? Whereas the buy volume, like, it really started to kind of tick up right here. It's starting to also tick up right here, and maybe a little bit of uptick right here too, which goes along with the accumulation chart right here. If you look at the timing of that, right? There's some increase in high volume buying, which these high volume buying usually are more indicative of like big money. This looks like an accumulation pattern, although the accumulation pattern can take a lot longer sometimes than you would expect, right? And also the 20-month moving average is starting to flatten out, so it could potentially signal a trend change somewhere around maybe Q2 of 2024, which would make the rest of 2024 potentially a pretty nice recovery year. You can also see this is trying to form a big giant rounded bottom, and I think this definitely looks like it's going through a bottoming process. Well, there's no confirmation for a trend change yet. My friend Market Maestro is absolutely correct. There is no confirmation, and for some people you may not want to be in it, but for me, I'm just kind of looking at the fundamentals. I'm looking at the trend change. Sometimes I like to catch a falling knife, and this is one of those, right? Now, the other thing is if you look at the weekly, and one better way to look at the weekly is, instead of looking at that, we can look at the bull market support band. It really does look like it's starting to form a very, very nice rounded bottom, where the band has really tried to kind of flatten out right here, although the price broke through down. The band is now trying to flatten over here too. Oh, it looks like the post-market, the price is probably going to break through down here as well. But it's really starting to get closer and closer and just kind of hugging this bull market support band here. Now, if you look at the bull market support band, it's consisted of the 20-week simple moving average and the 21-week exponential moving average, which is signaled by the red and green right here. Price, if it goes basically flat, there's a good chance it might start to have a little bit of a trend change, although there's no guarantee, right? But if it's negative sloping, it definitely can serve as a very powerful resistance, as you can see here. I do see that maybe over the next 3 months or so, there's a potential, as this continue to form a base, the price could continue to hug this 2021 moving average here on the bull market support band, and it can potentially start having a trend change. And once the trend change happens, that's when you really might see more of like an exponential growth going back upwards, right? So that's really the key things to show here. Now, if I take out this band, if I just want to draw a few ranges here, there are a couple ways you can kind of look at that. One is you can definitely see a horizontal line right here that has been getting rejected by. There's a high range right here between these two ranges, and there's also a lower range right here, right between these two right there. If you look at it, it's just kind of been bouncing at the high range, and it went down to the low range. It had a little bit of a deviation, and it went back into the range. And right now, post-earning is starting to kind of get back to the bottom of the range right here. Now, with the selling volume really start to decline significantly, and with some of these trickling buy volume right here, with institutional accumulation, I really can think that this is probably going to end up getting to the low end of the range, which might actually be potentially a good place to buy. It can go up and eventually bounce around the lower range over the next couple of months, eventually bring it up to the upper range, and eventually can change the longer term moving averages to go start sloping up a little bit, and then it might start becoming a bull trend and it can do its thing, but it can take some additional time. One other thing that I've kind of been seeing is that this stock has been giving me a look like it wants to become a descending broadening wedge right here, which technically it can bounce up here. The better way to draw is probably if I use that as a deviation to draw it like that. That gets a little bit more touches on the lines. You can see that this is kind of like a broadening descending wedge where we touch right here, up down, and then now it's trying to form a little bit of a higher low, right? Of course, after earnings, it's going to bounce back right here, but still, like this right here could potentially be a higher low compared to here, which could potentially signify that it's trying to base and trying to form a trend change over the next couple of months or so. We will see. There's still not any significant technical confirmation with this stock, unfortunately. But it is forming a basing behavior. Sometimes I look at the fundamentals, sometimes I look at the chart, it looking like it's want to form a base. Sometimes I just go ahead and go in and try to buy a falling knife. This is one of those cases that I have decided to really start buying at this low range right here, because looking at volume, it does look like it's an accumulation. Looking at Fintel, it does look like it's an accumulation by the institution. So I tend to want to do what the whales are doing, even though sometimes it can be a little bit painful, especially the stretch right here. But I do see enough of things that got me confident. Now, this is not one of those that I would just want to go, spend a lot of money to buy like thousands of shares at once. I really have been systematically just buying every week. I really haven't been just, going up crazy and just buy a bunch at a time. I buy about 30 to 40 shares every week. Sometimes I buy a little bit more depending on the funds that I have. And I've been doing it for quite some time, really over about a year or two. So I'm gonna keep on slowly to do this. The stock is gonna do its thing. The macro is gonna do its thing. There is no guarantee. I am catching a little bit of falling knife, and I've mentioned that many times on X. I don't want you to follow what I do, but I do want you to understand my thinking process, my charting process, and it's one of the very rare stocks to actually talk about the fundamentals for. So I feel strongly about it. I'm going to keep buying it very very slowly, and I don't want you to just blindly follow me. And I want you to think about what you want, what you think about the fundamentals, what you think about the technicals, whether or not it's worth buying a falling knife, and if you really think that other competitors are going to come in and just eat, MTTR's lunch, then it's fine. I do have a couple other points to kind of point out here too. First thing is that up here, the euphoria stage, the company was guiding something ridiculous like 60% annual growth, which is just not happening. Not there is a little bit of euphoria here, but there's no way the company is really like going to be able to deliver 60% growth. Just no way, right? So down here, the company is more delivering maybe like 20 to 30% growth rate, which is still pretty significant. And right now it's kind of trading right near its cash equivalent. So I think the risk is relatively low. The balance sheet is very, very healthy. It's a real business. It is making money. I don't like the fact that they have stock-based compensation to a degree, but they are decreasing. So you have to kind of think about what it is that you feel strongly about, whether or not this is worth your time or not. It may not be, and that's completely fine. Thank you so much for listening. I do want to say that this is one of the major stock that was, being hyped up by a lot of pretty important people on CNBC as a potential metaverse play. As you can imagine, if the metaverse ever come back, if there's ever any hype on it, there's a potential for this stock to also go exponential again. Just food for thought, right? Right now, you're basically buying at close to cash price. Anyway, I'm done talking. It's been close to 20 minutes. Bye.